Breezo gang. What is good, my beautiful family? It is your boy Breezo, and we are back with another video. Alright, so we are going over what you guys seen yesterday when I charted. We're going into depth about everything I said yesterday because I got a special request, and yeah, let's get into it. So I'm gonna answer a few questions first before I start. Where do I chart? What platform do I use? I use Webull. You can download Webull, TradingView. I like Webull. The charts are pretty nice, and they got some new updates, and I really like them. What is charting? Basically, what charting is for me is it's basically a prediction. What I think is gonna happen. Obviously, we don't know what's gonna happen in the market. Nobody knows exactly what's gonna happen, but we can use strategies, and we can use indicators and other factors to help us predict what we think is gonna happen. So that is why I chart, and that is basically what it is. When do I chart? I chart at night. Also, you want to make sure to chart in the morning before the market opens, so before 9:30, anytime, because of pre-market. So whatever you chart at night might be affected during the pre-market, so you need to rechart before the market opens. All right, now let's get into it, man. We're gonna start all over. Hold on, we're gonna refresh this whole chart. We're gonna start from scratch. We're just gonna look at the time frames. These are all the time frames. Different time frames is you got a monthly, a weekly, got a yearly. This is the yearly. So this is represented. Each candlestick represents 1 year, right? So you go to the monthly. Each candlestick represents 1 month. The weekly, same thing. Daily, same thing. Hold on. We're going to take all this off. We're going to focus on just the candlesticks. Alright. So we got the daily, the 4 hour, the 1 hour, 30 minute, 15 minute, 5 minute, and the 1 minute. So each chart represents something different. It's the same thing, but it's different time frames. So it's going deeper and deeper into it. So this candlestick you see right here, this is going to be the volume we're looking at. You see this big candlestick? That means it's a lot of volume. That means it's a lot of shares being traded. So this means it is a lot of shares being traded. That's what volume means. You see that 80? What is it? 80 million? That's the volume. 80 million is the volume. That's how many shares that's being traded. So contracts, I trade contracts. Options trading is contracts. So 1 contract equals 100 shares. See? So for contracts, you got calls and puts. You got calls and puts. A call means you think the stock is going to go up. Puts mean you think the stock is going to go down, the price, right? These are the different strike price. So if you was to get puts and you think the price will stay below 457, this is what this means. This is the time of sales. So this is basically showing you every single sale. So the red would be puts, and then the red would be a sell. The red would be a sell, and the green would be a buy. and it tells you right beside it how many shares. So 5. So yeah, it tells you right there 100. That's probably one contract. So yeah, all right. Let's talk about what the trend is. Okay, let's talk about what a trend is first. So a Fibonacci retracement and a Fibonacci extension are two different. The Fibonacci retracement is created by taking two extreme points. So the peak, which is the top, and then the lowest point at the bottom. And you're gonna take, that's basically like the average. You remember when you used to take the average, you take the highest, the lowest, you add like basically like the median. So you take the highest and the lowest, and then you divide them by each other, and you get the median. You know what I'm saying? So you got a 50% retracement. So I look at the 50% and the 61.8. So price tends to pull back to the 61.8 the most. The lowest to the high, since it's in an uptrend, right? And what I'm doing in the settings is I'm gonna show you just the 50% and the 61.8 retracement. That's the only two we worried about. So you see price is in a uptrend. So if price tends to pull back, that is the price it will pull back to. This is on the daily chart. Remember that. Remember, every chart is different. Every chart is different time frame. So this is a daily. So each candlestick shows 1 day. It represents 1 day. Now let me show you the Fibonacci extension. Okay, now we're gonna change the color. Let's change it to blue. Anyways, we're gonna change it to blue. I'm gonna take the lowest point, and we're gonna take it to the high. This is for the Fibonacci extension. This is for the Fibonacci extension. And that's gonna give us two levels. We're only worried about the top two, which is the 100 and the 127.20. And this is the levels it gave me. Alright, and that's the extension and the retracement. Okay, so we're gonna talk about key levels. I'm gonna show you guys exactly what I mean when I say key levels. Key levels is gonna be a horizontal line of support or resistance. It doesn't have to be an exact line, like it doesn't have to be an exact number. It could be an area. So it doesn't have to be 54.13. I'm not saying exactly at that spot. It could be in the area. Normally a psychological area would be 52 15. So it'll be like intervals of 5. So intervals of 5. So 5, 10, 15, 20, 25, 30, so far and so forth. So wherever I put this line would be 55. I would put 55.15. That's really what I put. It could be 55.20, 25, just that area, in that area. It's not a specific number, not a specific line, just an area. So this means that the peaks or the bottom, the lows in the price graph line up to a horizontal psychological barrier. Support and resistance lines are critical concepts in technical analysis. So basically, support, we all know support would be, if the stock is in a downtrend, then support would be at the top and resistance would be at the bottom. If we are in an uptrend, support would be at bottom and the resistance would be at top. So in this case, this is a downtrend, so I'm gonna show you. Resistance would be down here. Support would be up here. It could be up here or it could be up here. We would just look at different time frames. So support is a price level that the asset or the stock does not fall below for a period of time. So it's respecting this level. It will not break below it. That's support. Support level is created by buyers entering the market whenever an asset dips to a lower price. And resistance would be a price or a zone above the market that contains the upside movement to an asset. Resistance is where selling interest appears over time, blocking further upside progress. So resistance will be at the top, so it keeps hitting the top, so it won't go through. So that's resistance. If it's showing strong resistance, that means the stock came up and it kept testing this level, but it won't break through it, So it could be the high of the day, or it could be the high of that in the hourly high. So basically we're looking for multiple touches. So what this means is I'm looking for a spot on the chart where when I put my line down, you see where the stock came to this line and it either broke through or bounced, meaning it hit that level and it rejected it. If we are in an uptrend and it hits resistance, that is a rejection. It hits your support, that's a bounce. Okay, so what I'm doing here is I'm just locking my lines in place. That's it. So these blue lines are the weekly. This is the weekly. So now I'm gonna go to the daily. We're gonna find key levels on the daily. The candlesticks are touching on multiple areas. Okay, now we're looking at the orange lines. Orange lines are going to be the daily. So remember, the further out the time frame it is, the stronger the level is, meaning price will react a lot more at this level, if that makes sense. So price, you will see a fluctuation of price. You will see volatility. You will see volume. You will see a lot of movement. That's what that means. So at a key level, you will see price action. You will see a lot of price movement. You've got a couple daily lines. We're going to put another orange line in between here. So if the orange, so the daily is close to the weekly, and it's close to one of your support or resistance level, this is called an area of confluence. So that means it is multiple things going on at this key level. So this makes it a strong level, which means price will react to it. And you will see a lot of buyers or sellers step into the market. Like I said, when we're trading, we don't know what's going to happen. Like I said, the overall trend, the stock could either be in a bull market or a bear market. The bull market means that it's green, it's going up. Bear market means it's going down. You would get calls if you believe it's in a bull market. You would get calls, meaning that you think the stock will go up. In the bear market, you would get, ideally, you would get puts. Remember, you want to buy low and sell high. So if you're getting puts, you want to make sure you're buying at a pullback. So if you're buying puts, you want to make sure you buy when the stock rises, when it's on a pullback, and vice versa when the stock is going. If you're getting calls, you want to buy low, so you want to purchase when the stock is low. All right, so we got the blue lines for the weekly, orange lines for the daily, and now we got purple lines for the hourly. So like I said, if you got an hourly close to a daily, and it lines up with maybe a Fibonacci level, you need to take note on that area. That is a strong area. That means when price gets to this area, that means it's going to be a lot of buyers or sellers. It's going to be a big movement. Fibonacci. Okay, now let's see the Fibonacci. Now let's see what area the Fibonacci falls closest to. Hold on, move that up. Okay. Lock that in place. Make sure we go to the settings. And we only want the 50% and the 61.8% for the retracement. Alright. Okay. Now you see how that golden area is close to that purple? And that purple is the hourly. So we'll be watching for price to pull back to that area. If we do see movement to the downside, that's what we're looking for. We're looking for price to move down to that area. And let me show you this extension. Now, if price does bounce, I'll change the color, blue. Oh no, let's change it to, what is it, green? Yeah. Okay. For the extension, we only need 100 and 127.20. Okay. So after price bounces, if we see a break above this, green line, which is the high, 48.43, this is the next stop, 49. This is what it gave me. Based off the Fibonacci extension, that's what it gave me. So that's my levels. That's what I'm looking at, all these levels. So like I said, we don't know what the stock will do. That's why we have multiple indicators. We have multiple levels. We have the extension, the retracement. We have the key levels. We can use support and resistance. So we can use multiple factors to give us an idea of where it's gonna go, right? All right, quick. Let's go over the an actual candlestick. So what a candlestick is, what it shows is the wick. This is the wick. All right. This is the body. You see this? This is the body. This is the wick. Might have a wick on the bottom. Might have a wick on the top. It can have a wick on top and bottom. Or it can, or not. Doesn't matter. So basically, the top of the wick is that on a green candlestick, the top of a wick is the price that is the top of the wick is where price went the highest in this time frame. So what is this on? Is this the daily? So this is the daily. So look, this is the price, the highest that the price went for the whole day, right here at the top. Matter of fact, let's just do it right here. So right here, look at this candlestick. So 40, 48, 43 is the highest that this candle went in the whole day. This is the whole day, right? The bottom right here, the bottom of the wick, is the lowest point or the lowest price that it was all day. The lowest price it was all day, right? You follow? Okay. Let me know if you follow. And now this, the body, right here, the bottom of this is going to be where the stop. This is where it opened. And this is where it closed. And for a green candlestick, this is where it opened. And this is where it closed. So open is at the top. Because it's red, it went down. So it opened up here and it closed down here. So hold on, I want to look at hold on, I'm going to show y'all. Alright, bet. Alright, I want to show y'all. I just want to show y'all a candlestick. Alright, so look. If the candlestick is green, price opened here, maybe dropped all the way down here to the bottom of this wick. If you can see that right there, which is what, 265.79. That so happens to be the price. So it opened here, it dropped down here, and it came up here. My bad. It came up here, the top of the wick, which is 266.86, top of the wick, and then it closed right here. So that's what made it green, because it closed higher than it opened. It opened right here, went all the way down to the bottom of the wick, came all the way back up. This was the highest it went, but then it came right here. So it closed right there. Boom. As you can see, 266.45 or 44, as you can see. So in a red candlestick, price opens here. The highest it goes is here. And then the lowest it goes is here. And then it closes right here. So it closed lower than it opened. The open is here. The close is here. This is the highest the stock was, the top of the wick. And this is the lowest it was, the bottom of the wick. If you guys can see that, let me see. It is a wick. It's a tiny, tiny wick on this one. I don't know if you can see that. I zoomed in. I can zoom in even more. There you go. There's a wick at the bottom of this candlestick as well. So like I said, let's look at another one. So price open right here. All right, price open right here. It went all the way up to here, and then came all the way down here and closed right here. So what you would be looking for is to buy, if you're getting puts, you're trying to buy your contracts right here, somewhere at the top of this wick. If this was your entry, you would try to buy right here and sell somewhere down here. Now, if you're getting calls, which means you think the market is going up, the market opens right here, right? Goes as low all the way down here. This is when you want to buy. Shoots all the way up here, but closed right here. So it closed above where it opened, making it green, making it a green candlestick. So like I said, this is the body. These are the wicks. Oh yeah, here we go. Support. Let me show you the support and resistance. Okay, so this right here is clearly gonna be support. You see, about price came to this level, went. Let me zoom in for you. All right, remember this is the daily chart, so each candlestick represents one day. All right. So price came down here on this day. Next day, it bounced off here on this day, came up here. Treated, you see how I put this, you see how this line is right here? It literally bounced, rejected right off of that level at 38.85. Came down, bounced again. So this whole area should really be all of this is support. So I really could move this up. It's about right here. And you see this. So a key level, it could be a level, could be an area. It doesn't have to be just one single spot, like not exactly 36, 38. So boom, price came to this area, bounced again, moved sideways for a little bit, had some ups and downs, moved sideways, whatever, came back down, bounced again. Look, went back up, came back down, bounced off of this level again. You see what I'm saying? So you see how price just keeps bouncing off of this level? So it's a good bet to say that price is gonna bounce again somewhere in here, and we're gonna get another push back up in a few days. So that's just something quick just to show you like how this is respecting the support level. This is support and this is resistance. You see her it came up here, tested it. It's still in this area, didn't break through. If it broke through, it needs to break through with volume. So when I say breakthrough, I mean the price goes through this area. So it went up, it tested the area, but it came back down. So a breakthrough, let me show you a breakthrough. So look, a breakthrough would be, well, this is a false breakout. This is a breakout. This is a false breakout. But let me see. Let me go to a different Starbucks. Yeah, let's go with Starbucks. Starbucks is a good example to show. Okay. So let me show y'all. Okay, so Starbucks was in this trend, I actually traded this a while ago. Was it like a month ago, a few months ago? Yeah, 2 months ago. Okay, so look, this is the trend. Starbucks was in a downtrend. This is what do you call? This is a falling wedge. That is what it is called. This is a falling wedge. So this is a chart pattern. This is a pattern. So yes, you can use patterns as well. They have chart patterns. So it's different strategies. You have key levels, Fibonacci levels. You can use Fibonacci retracements. You can use price action, supply and demand, support and resistance. Yeah, it's literally it's literally 1,000 ways to trade. You can trade any way you feel like, any way that's the best for you. That's what you trade. So all right, like I was saying, this is a falling wedge, and look what happened. It broke out of the wedge. So this is the end of the trend because it broke. You see, a downtrend consists of lower highs the stock just keeps falling. So right, so then it breaks above the previous high right here, right? So that's how you know this is a good entry right here. This will be a good entry point right here on this right here. You see volume, you see a little bit of volume. These candlesticks, this green candlestick is bigger than all the other candlesticks around it. That means it's more volume. So look, it gave that some momentum, and it kept pushing to the upside. You have long wicks. That's another good sign with big volume. So we see a push to the upside now. So that was a break of trend. It broke the trend. Like I said, it was a falling wedge. It was in a downtrend, and it broke out of that, and now it went in an uptrend. All right. Let me know if you follow. Let's look at Pepsi. That's another example. Okay. Let's go to the 15-minute chart. Okay. No, wait. Let's go to the 30. Yeah, 30-minute chart. Okay. So each candlestick represents 30 minutes, right? So let's talk about what price did. Let's talk about what price did right here. Let's talk about what price did right here. So what it do when it, this is, like I said, this is resistance, this is support. Let's talk about what it did, what it does. So it's in an uptrend, right? It's resistance, smacks it, big red candlesticks. So that's momentum. So it's gaining momentum to the downside, right? This is a swing high. This is where the peak meets and it changes direction. This is a swing high, right? So it comes down. It doesn't go all the way back to this support, but it comes back, right? Retest, reject it. Came back right here, boom. Tried to break support, couldn't. Didn't have enough strength. Came back up. Right here, see? You follow? His support. This candlestick, and this is 30 minutes. So it's just back and forth. It's just like ping pong. It's just bouncing back and forth. So then boom, it did this. Got all the way up. Almost broke through. So what I mean when I say breakthrough, you want to see the whole body, not just the wick come out, but you want to see the body close outside of this area. That's what I mean when I say a breakthrough. It has to. You see how the body came outside of this support? That's what I mean when I say breakthrough. So it broke through, but eventually it came back. Broke through. Now it has a hold. Now it's treating resistance as support. That's what will happen once it breaks through. Once you break through resistance, now it will treat the resistance as support. So I can drag this all the way down, right? And now this is the same thing. This resistance, same, just got turned to support. So now it's respecting this. So see, it's bouncing off this. This is our new trend. This will be the support now. And resistance will be up here at the high of day because it couldn't break through that. So that will be your new resistance. This is your support. This is your resistance. Remember, we are in an uptrend. So support is at the bottom, resistance at the top. If we were in a downtrend, support would be at the top and resistance would be at the bottom. Right? Okay. Let me know if you follow. Let me see if we can find another example. Dollar General. Okay. So we got four big green candlesticks, right? But as you can see, it started off big. You know, it got a little bigger here. And then this one lost momentum. It's big wicks, so that'll tell you something. And now this is the swing high. This is where this right here. This is where you can see a reversal. This is a change in price. Not a full-fledged reversal, just a change in direction. So big red candlesticks, a lot of red momentum. You see some red. You see some volume right here at the bottom. We can get more into depth if y'all want to know like what each candlestick means, like the patterns. If y'all want to know that, let me know. If we can go into another video about that. And I think this pretty much wrapped this video up. This video is gonna be long. It's gonna be about probably like an hour long, maybe 30 minutes at least. And yeah, if I missed anything, let me know. Breezo gang, and we out.